Well, good morning, everybody. It's a pleasure to be here. Thank you for the kind introductions. Before I begin, I'd like to thank Mayor Janway for welcoming us to Carlsbad. And many thanks to all you for attending this, as well as our distinguished guests in the audience. I'm excited to be here. It's my first time to Carlsbad, New Mexico. You all have been wonderful hosts, and I'm proud to represent Chevron and the 250 employees that we have working throughout New Mexico. So my goal today is really to give you all a sense of what's going on here in the Delaware Basin and how it fits in kind of the global overall energy picture. But before we go there, I think it's important to kind of frame where we're at today. So today, the Delaware Basin has emerged as one of the key epicenters of the U.S. energy renaissance. Has been well documented in the panels this morning. This supply renaissance is occurring against very, very volatile energy markets in need of new sources of reliable and affordable energy supply. And then as you look around what's going on throughout the world, geopolitical events such as Russia, Ukraine have only underscored the role that affordable and reliable energy plays in economic development. And as we look at the Delaware Basin, we believe it's uniquely positioned to be a key energy source in not only meeting this nation's energy needs, but the energy needs of the world more broadly. So if I leave you with one simple thought throughout my talk, is that the future story of the Delaware Basin is one of growth and new investment. If we can go to the next slide. So as we are a publicly traded company, I need to put a cautionary statement in here. Apologies for the eye test, particularly on the screen, as all legal documents are, but I'll cover the high points for you. I'm asked to remind you, we're going to be talking about the future. And so this presentation contains forward-looking statements, forecasts, and projections. These forecasts are based on the best information we have as of this day today, but I recognize there is some uncertainty and market events could play out much, much differently. So now that we've got the legal business out of the way, let's get into the content. So if we could go to the next slide. So let's start with today. If we look at what's going on in global energy markets, oil prices have quadrupled since the lows reached during the pandemic, and that's really driven by the fact that the rise in global demand has outpaced our ability to bring new energy supplies to market. This has drained inventories and reduced spare capacity as we look throughout the world. The substantial supply side buffers built throughout the pandemic are now essentially gone. So today, most experts look at spare capacity as one of the key buffers to geopolitical events and supply side disruption. As we look at spare capacity today globally, that number has dropped to about 1.5 to 2 million barrels a day, as you can see on the chart. That equates to about roughly 2% of global supply today. That's our buffer. And as you can see in the chart, history shows us that any time spare capacity drops below 2 million barrels a day, oil prices tend to go up on a sustained basis until a new market balance can be restored via investment. So this is the oil picture. I think if you look on the gas side of the equation, it's actually much, much tighter. Gas is less fungible and not as easily traded throughout the world as you think about what's going on in Europe and Russia, Ukraine, and it's more exposed to those dynamics. And so while the oil picture is tight, I would stress that the gas picture is even tighter. So what is this all telling us? I think if you step back and think about it, today's market signals are really telling us the energy industry and the oil and gas industry is entering a new investment phase that's required to kind of reestablish new sources of supply and bring stability to global markets. So next slide. So that's kind of the short term. So now let's talk about the long-term energy picture. So as we look over the long term, we see that global energy demand is projected to increase about 30% between now and 2050. This projection comes from the International Energy Agency's stated policy scenario, which tries to reflect current trends in macroeconomic activity, consumer behavior, technology, and policy. This increase in global demand is driven really by two primary factors. First, the fact that the global population is expected to continue to increase by about 1.9 billion people. Those are people around the world that are going to require basic forms of energy like electricity, like oil and gas at some point in the future. The second factor is the fact that the world economy is expected to more than double over the next 30 years. That will drive income expansion and really translate those people into energy consumers as people are able to afford appliances, vehicles, things like that that consume energy. I think the second important thing to note in this chart is that oil and gas are projected to remain an integral part of the global energy system. So today, they account for about 50% of what's consumed globally in terms of the energy system. And in this projection, they're expected to maintain that market share over the next 30 years. I would remind you that this occurs against the backdrop of an energy system that is getting more efficient and where renewables and low carbon sources of energy are among the fastest growing sources of energy in this picture. This really underscores the challenge and scale of the global energy system. The key point being, which has been referenced several times this morning, is that as you look globally, all energy sources are really going to be required to meet the world's growing energy needs as we look out over the next couple decades. At Chevron, this goes back to our core belief that affordable, reliable, and ever cleaner energy are really at the foundation of global macroeconomic activity. Next slide. So a lot of focus often gets talked about the demand side of the equation. Where is demand headed? But I think one of the unique things about the oil and gas sector is that it requires a substantial amount of investment just to replace existing decline. So as we look at this picture, we see that the top line oil and gas demand grows at about 1% per year over the next 30 years combined, based on the forecast. But I think what's underappreciated is the fact that we need to replace a lot of those barrels through new investment in supply. So one of the things we do is we look at, okay, if you turned off investment today and invested no capital in the industry, what would the decline profile look like? And globally, that decline profile is roughly about 8%, right? And so as you can see over time, it creates an immense new supply gap that's on the order of about 150 million barrels a day of oil equivalent as you get out to the 2050 horizon. For context, today's global oil and natural gas supply capacity amounts to about 120 million barrels a day of oil equivalent. And so I think one way to think about this is, as you look out over the next 30 years, the industry basically needs to replicate the existing infrastructure and network of global oil and gas supply to overcome this supply gap. And so you may be asking me, this is all interesting, this is economic and academic, but Rob, what does this really mean for us as an industry? So if we go to the next slide, I think really what it means is you need a boatload of investment, right? So globally, it's estimated to meet that demand curve that I've showed. Globally, it's estimated that you need about $26 trillion of investment in oil and gas supply over the next 30 years to meet that projected increase in demand. So for context, the industry has been investing at a pace of about $750 billion per year on an annual average basis since about 2016. During the height of the pandemic, industry investment dropped about 20%. And so since then, because of industry dynamics and price dynamics, we've recovered back to roughly that $700 billion per year figure as an overall industry globally. But as we look forward, that investment needs to rise to a level that's $800 to $900 billion per year to meet that projected increase in demand. And as we start to think about that and unpack what does that mean for the Delaware Basin, North America, to start, is anticipated to attract about 30% of that investment, or nearly $8 trillion over the next couple decades. This is really driven by the low cost and large shale and tight oil resource base here in the United States that we've been talking about this morning. And then as we start looking at the Delaware Basin and the role New Mexico plays, they're really central in this equation as well. So New Mexico alone is expected to attract 5% of that global investment, or about $1.3 trillion of investment over the next 30 years. So again, substantial investment despite that forward demand trajectory. Next slide. So what does this all mean in terms of production going forward? So based on our estimates, US oil production is projected to continue to grow and reach a peak of about 14.5 million barrels a day in the 2030s. And that's really driven by the anticipated investment in the shale and tight resources we've talked about. New Mexico and Texas in the Permian Basin is really central to this growth story. So if we think about the role that Texas and New Mexico played a decade ago, they accounted for nearly 1/3 of US oil output. Today, these two states account for about 60% of US oil output, and that's largely thanks to the growth in the Permian Basin. And as we look out over the next several decades, by the time we get to 2050, these two states will account for 2 in every 3 barrels produced here in this country. So they'll play a substantial role in meeting not only the energy needs of this country, but the world, more broadly. As we start to dig deeper into New Mexico, output's projected to rise to over 200 million barrels a day by the 2030s. And if you think a decade ago, overall output in New Mexico was just 200,000 barrels a day. So that's just massive growth as you think about the potential of what's going on here. New Mexico alone will account for 1 in every 4 barrels produced in the United States in this chart by 2040 and really hold that level as you get out over the forecast horizon. I think as you start to look at this picture, they really underscore the vital role that this state plays in meeting the growing energy needs of our nation and world more broadly. Next slide. So if we look at the same data, but look at it more on a basin by basin basis, we see that the Delaware Basin plays an increasingly important role in growing and sustaining US oil production in the coming decades. So production from the Delaware is expected to grow by over 1 million barrels a day by 2040, and it's expected to account for about 40% of the projected growth in oil output over this forecast horizon. So I think you can think of the Delaware Basin as really one of the anchors for the US oil industry and the growth potential moving forward. The Delaware Basin, if you think about it in terms of its share of production, will account for 1 in every 4 barrels produced in the US by the time we get to 2035 and hold that position as we get to 2050. Globally, this represents about 3% of global oil output over the same horizon from just the Delaware Basin alone. The basin's prolific low-cost resource base helps to enable the growth that really cements the Delaware as a key source of energy supply for the world. Next slide. So we've talked a little bit about it this morning as well. There's a lot of focus on the oil side, but natural gas is also equally as important. So as we look at the Delaware Basin, the story also extends to the natural gas picture here in the United States. Looking ahead, the Delaware Basin is expected to account for about 1/3 of growth in US natural gas output by the time we get to 2035. The Delaware Basin will reach about 12% of US gas supply by the time we get to 2030 and hold that position through 2050. So as you think about the role that natural gas plays in our economy, it's really become a competitive economic advantage for our nation. It's helped spur new domestic industries like LNG exports, growth in the petrochemical sector, and a rebirth of energy-intensive manufacturing. From a national perspective, our vast domestic resource base also provides our economy low-cost competitive advantage, enhances our energy security, and has been mentioned earlier this morning, helps to decarbonize our energy system as we think out over the next several decades. So as you think about the role that the Delaware Basin plays, it's really also central to that natural gas story in helping the United States maintain that competitive advantage through this low-cost gas supply base. So next slide. So I recognize this one's also a little bit of a challenge, but what I hope to do is really, we've talked a lot about the future and projected forward, but we haven't really unpacked the why. Why is the Delaware Basin such a prolific resource? And I would leave you with 3 thoughts there. First, it starts with favorable geology. Prior speakers have documented the resource base and the prolific nature of it, so I won't get into the details there. But the thing, to think of it is that resource base really sets the foundation for the runway of growth that I have painted on the slides prior. The second important thing, and perhaps the most important, is when you look at the Delaware Basin relative to other resource plays globally, it's among the most economic. So when we look at production and resource weighted average break-even prices across a number of assets, we see that the bulk of the resource in the Delaware Basin is economic or can earn an average rate of return of about 10% at oil prices between $30 and $40. If you think about the implications of that, this makes the Delaware Basin a very, very attractive destination for industry capital and really cements its position as a key source of supply in the coming decades. The other aspect, which has been talked about this morning as well, which is equally as important, is the fact that the Delaware Basin resource is also among the lowest CO2 intensive globally and sits on the lower third of the global CO2 intensity cost curve. The basin competes with other low emissions resources when you look at resource availability in the Middle East, Brazil, and the deep water Gulf of Mexico. And that low relative CO2 intensity is also an important attribute as the world looks for lower emission energy supplies as part of efforts to decarbonize our energy systems and economies more broadly. If you remember one thing from my talk today, it should be that the Delaware Basin is really an advantaged resource due to its vast reserves, favorable economics, and low overall emissions profile. Next slide. So to kind of further stress the point, when you start to look at, well, what is Chevron doing? You start to see that the Permian and Delaware Basins are really central to our long-term growth strategies and plans in the company. We plan to invest about $4 billion per year across the Permian, with those investments expected to grow production to 1 million barrels a day or beyond by the middle of this decade. For context, the Permian accounts for about a quarter of Chevron's current capital investment. We see the assets here in the Permian Basin as really economically advantaged and deliver returns on the order of 30% at a nominal oil price of about $60 per barrel. That's really attractive economics and really reinforces some of the industry data that I had showed you on the prior slide. The other important aspect of our Permian resource is that it's also low, 2/3 lower on average than the global upstream resources available. And so it starts in an advantaged position, but the story doesn't start there. We have corporate targets to reduce our emissions intensity. And Greg had mentioned the tour of the solar facility that occurred yesterday, and I also had the opportunity to go on the solar installation, which is just outside here of Carlsbad. And what's interesting about this solar field is not going to power facilities or homes. It's really being used to support our oil and gas operations out here in the field. And so that asset will be supplying power to an electric compressor station outside of Carlsbad here with renewable energy and the solar energy that's generated. That's a great example of continuing to put capital in to reduce our overall carbon intensity. That project was sited on land trust and then developed with the engagement and support of state and local government. And it's a perfect example of how we can continue to find innovative ways to partner and produce New Mexico's oil and gas with lower carbon intensity to meet the world's growing energy needs, as I've highlighted previously. I think in a simple sense, everything at Chevron right now that we do is guided by 4 simple words: high returns and low carbon. The Permian Basin really checks both those boxes in a big way and is central to our growth plans. Next slide. So as we think about the role that the oil and gas industry plays in New Mexico's economy, hopefully I've convinced you that the level of investment and growth expected will remain a foundational element to the economy going forward. Today, the oil and gas industry is really central. It supports about 1 in every 7 jobs in the state, over $6.5 billion in incomes and salaries that really boost spending across the state, and provides over $2.5 billion in state and local revenues. In aggregate, we estimate the oil and gas industry supports nearly 18% of the state's economic output. The anticipated growth in capital spending and output from the profiles that I've given you earlier today suggests this will continue to likely rise in the coming decades. Now, as an economist, I appreciate the fact that the current environment and fears about inflation, recession, and all that cast a little bit of a cloud over this outlook. But I think as you step back and look at what's going on in the world and say that the world needs affordable, reliable energy supplies, as we get through this near-term macroeconomic uncertainty, I think the Delaware Basin will become a critical piece of the global energy supply picture that will sustain the contributions to New Mexico's economy at these levels, if not above. Next slide. So, as I close, I leave you with one parting thought. The future of the Delaware Basin is bright. As I've suggested, the energy needs of our nation and world continue to rise, and oil and gas remain integral to that global energy system for the coming decades, even as the world looks to reduce emissions and decarbonize energy systems. Globally, over $26 trillion of investment in new supply is required to meet the projected rates of demand and offset decline, and New Mexico alone will attract over $1 trillion in capital as we look out over the next 30 years. As I've suggested, New Mexico, and the Delaware Basin in particular, remain an extremely attractive destination for industry capital given the resources, the economics, and the relatively low CO2 intensity of the assets here. I think, again, the key point here is that the Delaware Basin is advantaged relative to other resources globally and will play a central role in supplying the affordable, reliable, and ever cleaner energy that the world needs. Before I close, I'd like to thank Mayor Janway one last time for hosting today's event and would like to thank you all for your time and interest. Thank you.